Hello, everybody. I am Lauren Ramsey. I'm the Sales Operations Analyst here at Chomps, and today we're excited to share a special edition of our macroeconomic update for the holidays. As usual, we kind of like to share this update just to provide a little background on the trends we've been seeing. We know there's been a ton of news specifically around inflation and economic pressures. And sometimes it's not always the easiest to break down those trends. So that's what we're here to do today.
And I'm Claire Zwarchowski, Director of Category and Sales Strategy at Chomps. Excited to be here, especially for a fun holiday update. And Lauren, I love the holiday lights behind you. Definitely gets us in the holiday cheer. To kick it off, I think the biggest elephant in the room and what we've been hearing in the news most is CPI. I know the report was just released today. What did it say, Lauren?
Yeah, so Consumer Price Index, which is kind of the broadest inflationary measure, showed a decline for the second consecutive month. The reason this is big is because in the news, you've probably been hearing that inflation is starting to go down, but we haven't really seen any proof of this in our economic readings yet. We saw a decline in October, but the nuance here is it could just be one offset decline. Now that we're seeing a second consecutive decline in November, it marks a trend of actually going downward. There are a few nuances to note with this, however. So it's still rising by over 7% on a year-to-year basis. This is still far above that 2% target mark. And there's certain sectors that are continuing to rise at higher percentages than others. So like food at home, for instance, is rising by over 12% still, while we're seeing energy starting to slightly decline on those record high increases that we've been seeing earlier in the year. And then kind of to offset that, we'll still likely see the Fed enact another interest rate hike, and that will be released most likely tomorrow by 0.5%. It'll bring our benchmark interest rate to about 4.25 to 4.5% as a whole. We haven't seen these numbers since the 1980s. So while we're moving in a good trend, it's coming at a slow rate.
I like improvement, but to your point, it doesn't always mean that, inflation's gone and we're moving in that opposite direction. Quick question. Were you surprised of any of these results, or was it what you were expecting?
Overall, I would say I wasn't really surprised. This is mainly because we had seen inflation start to drop last month, and there were consensus estimates released that were showing price pressures as a whole beginning to fall downwards. But again, you have to assess which sector of the economy you're looking at, and specifically if the price drop is being attributed to that sector, as it is not in food prices, it is in energy. Mm-hmm. And so that's why we look at often something called the core CPI index. So basically, food and energy are always these more volatile, changing measures. When you strip those from the index, you're still seeing that inflation is beginning to drop. And the main thing that is driving upward price pressures is the cost of living and shelter.
Makes sense. I would love to kind of deep dive a little more on the food at home sector, given, right, it's the sector that we play in. Do you mind just elaborating on that a little more?
Yeah, so food at home is on a slight decline, but it has hit in August. It was at the highest amount since 1973. And when we're seeing still the benchmark amount is about that 2%, we are hovering at over 10% higher than that. From last month specifically, we saw wholesale prices being driven upward actually by a huge rise in the price of vegetables, which jumped by 38% from last year.
Crazy. And from like a CPG perspective, really what we're seeing in numerator data is it lines really closely to that. So total grocery prices for the month are up just over 13%, with Snacking continuing to lead that trend up about 17%. We have started to see that slowly start to soften. It reached over 19% in July. So similar to the trend that you're showing, it is definitely starting to decline, but 17% growth year over year is still high and definitely impacts the consumer and their shopping behavior. One thing we're seeing is, retail sales kind of continue to be high. Spend per trip continue to be elevated year over year, despite less units being in the basket. We're actually starting to see spend per trip actually being flat year over year as consumers are putting even less units in the basket as inflation continues to impact these grocery prices. So putting it into perspective, if you typically go into a store and you buy 10 items, now, due to inflation and these rising grocery prices, you're only putting 8 units in the basket. That's about a 20% decline. So even with this 17% on average snacking price growth and 13% average pricing growth on grocery, spend per trip is remaining flat, really just driven by that softness. But we all know what consumers say and what consumers do don't always mean the same thing. So Lauren, do you mind walking through consumer sentiment and consumer confidence and what those key highlights there are?
Yeah, of course. So we have discussed in the past that we typically look at 2 different reports. So there's that consumer confidence report, which is released by the Conference Board. And this is basically a survey of 3,000 panelists on the overall economy. Then there's a consumer sentiment report, which is released by the University of Michigan. It's a much smaller group, but it's only 500 panelists. So the main difference is that the consumer confidence report is more of the overall economic overview versus consumer sentiment report is more short term. So the interesting thing is we saw these conflicting on their measures, but that consumer sentiment report, even though it slightly increased while consumer confidence went down, is still remaining near historical lows.
So if I'm understanding you correctly, basically consumers aren't confident in, increasing interest rates really to combat inflation and, obviously not confident with the rising prices to combat inflation. So consumer confidence is low. But on the flip side, consumer sentiment, how they feel is a little more positive, but still at all-time lows. So overall, not a very positive outlook on the economy right now. Is that fair to say?
Exactly. So that kind of short-term optimism has slightly inclined, but overall, the confidence around economic conditions as a whole is still going downwards. And a lot of that is because almost 75% of consumers believe we're still in a recession, and they have personally felt a lot of that financial pressure. And that's disproportionately impacting the low-income shoppers who are also feeling kind of this constrained employment period. And we are seeing, while inflation continues to go upward or may eventually seems to be slightly declining, but those wages are they're not keeping up with where inflationary pressure is right now. And so that gap has created an immense amount of financial pressure on shoppers. And that's really being reflected into this confidence and sentiment reading.
I mean, that makes sense completely. And I think it's important to revisit here. We've talked about the labor market in the past and how strong it is, right? And really how strong the labor market helped indicate that we weren't in a recession. But Lauren, correct me if I'm wrong, but the labor market has definitely softened, which I'm sure is contributing to kind of those wage gap pressures as, you can't just change jobs as easily as you used to. Can you kind of walk me through that a little more?
Yeah, so the labor market is definitely beginning to tighten up. From what we saw earlier this summer, we saw 3 jobs for every 1 person. It was highest quit rates we'd ever seen. And now that gap is beginning to rise and it's becoming a lot stricter. You can't just go out and find a job anywhere you want to meet the inflationary pressures anymore. And one of the indicators we look at for this is normally that purchase manufacturing index. And you'll kind of see the impact in that this month. It has shown growth for the last 29 consecutive months. And even though that growth has slowly gone down, anytime that index, which is just, it's similar to the confidence and sentiment report. It's a survey of panelists showing their beliefs about the economy and specifically the manufacturing and service sectors. But once that index goes below that 50% mark, then it goes from a period of growth to a period of contraction. So for the first time since May 2020, we are now experiencing contraction. And a lot of that has to do with that employment sector beginning to tighten, which has come in offset with all of these interest rate increases that we've received from the Fed, and demand is starting to go down as well.
Right. If the consumer is buying less, that has to have an impact on the manufacturing sector, right? Especially knowing where we were 2 years ago.
Exactly.
Interesting. Thanks, Lauren. Speaking of consumer confidence, Lauren, I know Black Friday was a few weeks ago, but would love your take on kind of what were the results of Black Friday and really how kind of inflationary pressures and consumer confidence and sentiment had an impact on Black Friday.
Yeah. So as you may be able to expect with kind of that confidence going downward and all of this inflationary pressure we felt over the last few months, retail sales did soften this year in comparison to last year. The interesting thing is we saw an influx of shoppers going to the store. And this may be because they were seeking sales specifically in this inflationary period. But we did not see as much spending as anticipated or in years past. And this may also be because sales weren't quite as big as initially hoped for, and also that shoppers are putting a cap on their spending as a whole.
No, that makes sense. I mean, inflation definitely impacted, my own personal Black Friday shopping. So obviously retail sales were softer versus years past. What was the bright side of Black Friday shopping? Did any channels win more so than the other channels?
Yeah, so online shopping continues to be driven upward and has actually reached another record high. So specifically on Black Friday, saw over $9 billion of sales. Cyber Monday brought in over $11 billion. And specifically that mobile channel is continuing to be brought up. The interesting thing, however, is that 58% of shoppers already say they're done with all of their holiday spending. So this may mean that while we've seen some channels continue to increase, there is probably going to be that cap on spending as a whole.
That's a great insight, Lauren. And I think it's a great segue into what we're expecting for the upcoming holiday season. What we know is everyone is excited to get together for the holidays this year. Looking back, I mean, no one's really had a typical holiday over the last 2 years, given the pandemic. Myself personally, I had COVID during Christmas last year, so I'm really excited to travel and get together with family. So what we do know is, over a third of consumers are expecting inflation to impact their Christmas. That can be anywhere from gifts, that can be from spending on food, that can be, snacks and beverages purchased with that time with family together. All we know is we do expect inflation to play a part of the upcoming holiday season. Consumers are looking to get together with their friends and family and definitely looking for quality time over, spending more on gifts and food as in years past. But we'll definitely update you on the actual results come 2023. So to kind of wrap it up, Lauren, do you mind just kind of walking through a key summary of what the key headlines were we talked about today and kind of the key economic indicators that we should continue to track monthly?
So yeah, I think if you're going to take away anything from this, it's mainly that CPI report that we've hit on time and time again that's showing disinflation as a trend is occurring. But even though it's softening, it's still going to be felt in our consumer confidence as a whole and in the near term in those holiday shopping patterns.
Well, thanks, Lauren, as always, for kind of breaking down some of these key economic indicators and just talking through kind of what you're seeing and kind of what you expect to see moving forward. For myself and Lauren and the entire Chomps team, happy holidays. We hope that you have a healthy, safe time with your friends and family this holiday season. And we can't wait to see you again in 2023. Bye, everyone.
Bye, everyone.